Other interesting business news, you have Ford. Well, their stock dropped a little bit after missing their Q2 goals. Now, let's go ahead and we'll pull up their stock really quick to look at the long term, which, shoot, when it comes, again, not financial advice, and comes to investment, hindsight's always 2020. Now, going to the Ford stock, I mean, long term, Max is, been all right, increased to 89%. Past 5 years, pretty darn good, increased 40.17%. Please imagine buying Ford at $4.40 per share, currently trading $13.67 per share. Granted, by the time this video is rendered and uploaded, it'll be different because stock market does what the stock market does. Past year, it's actually down 1.97%. Year to date, up 16%. Past month, pretty good, 11.77%. But past week, they're down around 6%. And what is it? The 52-week low is $9.30. 52-week high was $14.85. So not the best news for Ford. And yeah, their stock tumbled actually by 11%. This is thanks to Michael Wayland over at CNBC, in which he specifically says, quote, Ford shares tumble 11% after massive earnings miss. Now, they say the automaker has increased its target for free cash flow, but maintained its 2024 earning guidance, disappointing some investors who hope for a hike. Which, man, that'd be a real pull up a little picture of their vehicles there. Well, it's not the iconic Mustang. The real one with 3 pedals and a V8. You know the one I really care about and the really one that's really cool. They say, quote, Ford Motor came in short of Wall Street's second quarter expectations while beating on revenue due to warranty costs that plagued the company automaker for several years. Whoops. That's not good. Looks like that was one of the reasons their stock went down a little bit and their net profit went down a little bit. Which, again, is also an issue with Ford. In terms of transparencies, I've actually been pretty impressed. The CEOs are pretty transparent where they said publicly, yeah, we need to get our reliability fixed. We need to focus on, doing that. One would think they would have an increase in resource allocation to do so because, again, especially for the trucks, the perception is, Ford, well, it used to be in the 90s, that cliche commercial, Ford built tough or whatever it is called. They had a little logo smashed into the ground. And yet, they have a lot of recalls, more than their competitors. And yeah, when it comes to the recall, it hurts the company not just because of brand reputation, but as I brought up on the show several times, the warranty cost. Because again, the consumer's not going to pay for it. Again, it's a warranty issue, it's a recall. The business is going to take care of the customer. However, that means the business is paying for it. Dealerships do not like that either because the pay rate is much less than a standard service or an upsell to a customer, or just general maintenance to the customer. So dealerships aren't happy to do that warranty work. Mechanics usually hate it if you talk to any of them. It's not good for anyone. And in this case, it costs the shareholders, and people just aren't too happy about it. As again, as this article notes, well, they've lost a little bit of their sales momentum and their profitability because of it. They note that, quote, the automaker increased its full-year target for free cash flow, maintained its 2024 earnings guidance, disappointing some investors who hope for a hike. Ford's guidance for the year includes adjusted earnings before interest, taxes, or EBITDA of between $10 billion and $12 billion. That's not good. It causes stock to drop around 11%. They say that the earnings per share were again 47 cents adjusted versus 68 cents expected. Revenue came in at 44.81 billion versus the 44.02 billion expected. So, again, a little bit better in that regard. Now, they say, quote, the Detroit automaker says profitability was affected by increases in its warranty reserves used to pay for vehicle issues. The costs related to vehicles for 2020 year, model year, or older. Ford Chief Financial Officer John Lawler said during a media briefing, Ford said recent initiatives to improve quality and vehicle launches are paying off and are expected to help bring down future warranty costs. I mean, it'd be hard for them to do a worse job. I only partially kid. I have a couple of friends who have Ford vehicles, and what is it? Hubert, one of my neighbors, actually just had to fix his, Ford AC unit where there's a random pain in the ass valve way behind, like right by the firewall. They had to disassemble half the damn thing just to get that one little piece that broke. Again, that's not, and I think that's a 2012 Ford Edge. I'm not a SUV aficionado, except the Porsche Cayman, or Cayenne, sorry. Again, not that because they had a stick shift in V8 as an SUV, which is pretty cool. But even that, couldn't even pronounce it right. But nevertheless, this is a quote from the CFO. Lawler said, quote, we're making a real progress in raising quality, lowering cost, and reducing complexity across their entire enterprise. We're making real progress in quality, and that will benefit us down the road. Unquote. Then they say Lawler declined to disclose Ford's total warranty cost for the second quarter, but said it was $800 million worse than the previous quarter. Net income for the second quarter was $1.83 billion, or 46 cents per share, compared to $1.92 billion, or 47 cents per share for the same fiscal quarter a year earlier. Adjusted EBITDA declined 27% year over year to $2.76 billion, or 47 cents per share, compared to $3.79 billion, or 72 cents per share during the second quarter 2023. Not great. Ford CEO Jim Farley told investors that his Ford Plus restructuring plan is on track to make the automaker more profitable. Maybe. Again, they had the idea of dividing the Ford motor company into a couple of entities. So you have Ford Blue, which is the good one that actually makes a profit. That's the good old Ford F-150, the Ford Real Mustang with a gas engine and a stick shift, as all vehicles should be by default, of course. But then you also have Ford Commercial, which is the big ginormous for Ford 350, 550, 750, 950, and beyond. And then you have the Ford EV division. So you have the three side parts, and of course the EV is the one that lost. Again, Q2 is $132,000 per vehicle. Which again, it's comical to say that it's a good thing, but it is moving in the better direction compared to previous losses earlier fiscal quarters. Now, you say that Ford's traditional business, and then let's actually go back to, they say Ford's traditional business operations during that Ford Blue earned $1.7 billion during the second quarter, while the Ford Pro commercial business earned $2.56 billion, while its Ford Model E division, well, that lost $1.14 billion for that quarter. So, not going great, especially with a decreased demand for EVs, with most consumers being the faster growing category of interest being hybrids. So, will they actually make a profit on the EVs this year? And again, not financial advice by any means. They are moving in the right direction, but let's just say that direction has, Ford warranty problems or some funny cliche like that. And yeah, this is the worst time to buy a car. You have high interest rates, unprecedented economical and political uncertainty, with most businesses decreasing their spend to the bare minimum. I don't know anyone who's buying a vehicle unless someone who's been in a recent accident or they have to. So I'm not sure how well the rest of the year will be for automotive community, but let me know, do you know anyone who's bought a Ford in the past couple of years? Have they had these same warranty issues? I mean, you've seen all the viral articles about the UAW members installing back, the wrong seats into vehicles, wrong headlights, and somehow that makes it through quality assurance, which allegedly they do have at Ford Motor Company. But let me know in the comments, as always. It'd be fascinating to hear what you have to say. Thank you, everyone, for taking the time to tune in. Again, we're trying to get to 4,000 subscribers by the end of the month. So if you could click that button, I'd greatly appreciate it. Also, leave me a thumbs up, thumbs down, or a comment. It's a great way to give me some additional feedback, letting me know how I can make the show better and better. Lastly, don't forget to take the time to tell your family, tell your friends, tell your coworkers, heck, tell your enemies, tell anyone and everyone. Just stay safe, fight the good fight.